Very good morning, my friends. How are you? Hope you guys are doing very well, and welcome on this new educational video from Extreme Trader. This is Salah speaking. Actually, before we start, I really wanted to share with you what happened yesterday in the premium group. The results were really outstanding, and I'm very happy, as you can see, or as you can hear from my voice. I wanted to share with you that these are the signals that we have sent to the members yesterday, and please entertain your eyes by seeing these amazing results. Literally all of the signals went in very good profit, and as you can see, the members have really entertained a lot of profits yesterday from trading our signals. And these are the messages that we have received from the members. This gentleman here, again, he impresses me. He have gained $1,172 in just one day from using the signals. That is what I'm trying to explain to you always. The signals will never be that profitable every single day, but in general, that is what we are doing, and that's how they are usually do in our Extreme Trader Forex Signals group. Just wanted to say thank you for the excellent signals today. This gentleman here, excellent signals today. You nailed it. Keep it up. And this guy here, building back my account after making so many mistakes. Thanks, Angela. Today's signals were awesome, and yes, I indeed agree with him. It was really awesome. We did really very well, and the members thankfully very glad and happy for joining the service. So again, this is what we are doing. These are the results that we are used to have, and again, I'm very happy to have it, and I'm very proud, to be honest. I'm very proud of Angela's work and her great signals. So if you wish to join Extreme Trader Forex Signals group, please contact Angela. You can find her contact details in the description below this video. Contact her today, and hopefully we will see you there. So let's go now to the main subject of the video, and let's explain more about Fibonacci strategy. I have noticed that there is a lot of comments. They want to explain more about this strategy, and I think this is very important since we are going to use this strategy in the upcoming days and weeks, and I believe it is one of the best, if not the best strategy about. Actually, you can rely on Fibonacci on your 20 pips a day strategy and on your hit and run trades. So it's all about Fibonacci and how we can apply it. Now, before we start, let me just remind you something here, guys. This is demo account, of course, as you can see. That's why it's $50,000. That is not my real account, all right? Just let's clear it. That is demo account, and I'm using it today for educational purpose because I'm going to enter some trades, and of course I'm gonna fail it in front of you just to show you how we can actually apply the strategy. The next thing is, I needed to explain to you something here. Many traders, they won't accept with what I'm about to say here in this video. However, I really I cannot say I don't care, but I don't really want to go in these discussions with them. I have seen that before. I have my own ways on applying and using Fibonacci. I have been using it in the last 4 years, and it's working very well for me. Therefore, I'm just gonna teach you here what I know, and it's up to you if you want to agree or disagree. Last thing is I wanted to say here is I'm about to show you how to use the strategy. I'm not here to explain how Fibonacci works, how the retracements are work. What I care for here in this video is to explain to you the strategy itself and how you can apply it in your day trades. So let's begin. First of all is, why Fibonacci? When we are doing a Fibonacci retracement, why do we trust Fibonacci 61.8 the must? Or I mean, why we are really trusting to enter our trades on the level 61.8. As you can know already, Fibonacci level 61.8 is actually the golden jackpot in all of your Fibonacci trades. There is a good reason for that. Any candles or any market actually exceeds the level 61.8 of Fibonacci, that means that the trend, if it's going down, if it's a downtrend, it's no more a downtrend if the market is going to actually break out from 61.8. The meaning behind the market exceeding 61.8 Fibonacci, meaning that the market has now changed from a downtrend, for example, into an uptrend. That is one for the beginning. Now, we need to also understand this. If you have seen the Fibonacci retracement 61.8 has been broken out, it means that there is also a trend line has been broken out. It's not just a resistance level that has been broken out, it's also a trend line. So let me again draw Fibonacci retracement, and please pay attention. that if you draw here a resistance trend line like that, or if you look at that resistance level right here, it's always 61.8, meaning the fully breakout from the level. Now, as you can see, if we draw here a supported trend line like that, so we are having right now a channel like that, so the trend is going down, right? Now, when you see the market actually breaking out from 61.8, now that means this channel has completely been broken out and the market has changed the direction. Now, the normal behavior for the market in these scenarios is reversing at the highest resistance where the trend line has been drawn, and then the market is gonna fall down to retest the level, and then it's gonna continue the breakout. Usually the retest happens also on 61.8. As you can see, we also have here a strong horizontal resistance level, and usually what's happening is the market after the breakout from the 61.8 is gonna also come down to 61.8 to visit the same level again of the previous resistance, and then it's gonna retest the level, and if the retest has succeeded, the market is gonna continue growing more up. So that's why 61.8 is the golden jackpot of your trades, because it's not likely that the market is gonna break out of the trend line always. The market is gonna break out of the trend line usually because of some news or a strength in the currency or weakness of the other currency. Therefore, most likely the market won't actually easily, especially on the first attempt, won't easily break out from 61.8. As you can see, the market has reversed perfectly on the first attempt of 61.8, like that. So the market did not actually break out from the trend, and the trend is still continuing to go downward, or actually in a bearish momentum. Therefore, placing a trade on the first attempt of 61.8 is actually one of the best choices or best options you can ever do in your daily trades. I would recommend you to avoid the second attempt. However, if you are a day trader and you want to always have a good trades, and if you want to have a high probability in winning your trades, I would advise you strongly to enter the first attempt always of Fibonacci 61.8. So that's one point that we have cleared about the reason why the point 61.8 is the strongest. However, that doesn't mean that you can only trade on the Fibonacci 61.8. Actually, you can trade on all of these levels. Allow me to explain to you something here. Now, for example, you know something? Before that, we need to go to the point of how to draw the Fibonacci retracement. Now, that is the point where actually a lot of traders won't agree with me, but it's up to them. Anyway, Fibonacci retracement is actually, I would like to say it's a magical tool. It helps you to decide where is the support and the resistance, and it helps you to tell you if that level of the support or resistance is the right one you draw or not. So let's pay attention here. Notice that I have selected this chart randomly. I can see that we are having here a previous resistance, which was also in the past a previous support level. Now, from my experience, I would assume that this is level 50 or 38.2 on Fibonacci. So let me just draw the Fibonacci retracement from this high to this low. And as we can see, I'm almost right. It is almost level 50 of Fibonacci retracement. Now, there is something here we need to understand. Please pay attention to what happened on each and every retracement of Fibonacci. So what we can see right here, that we're having level 23.6, and the market has indeed reversed here, but maybe we cannot count this because that happened before reaching the point where we draw the Fibonacci retracement. So we can consider this point right here, and as you can see, the market has reversed almost on the same level of 23.6. Next retracement, what happened? Level, this is 38.6, just to be sure, just to show you guys. I just wanted to show you so it will be clear for you to understand. So now we can see, let me just increase this one a little bit like that. Okay. Now it's actually more correct. Now, as you can see, on level 38.2, the market has also reversed at this retracement and reversed here to hit that previous support level. Let's go to the next retracement, level 50. We can see that the market has also reversed on level 50 and then went down to 38.2. Now let's check next retracement. We can see 61.8. The market has made that fake breakout and then indeed reversed. Not only reversed, but as I just explained to you, the market could not actually break out from that resistance trend line and could not change the direction of the trend. Therefore, the reversal from 61.8 was much stronger, and the market has fallen down all the way nearly to Fibonacci level 0. Now, there is the thing here. Fibonacci retracement can never be trusted blindly. Okay, that we have to clear and make it obvious. Now, as we can see, guys, we had this level of Fibonacci retracement number 50, but we cannot just enter it blindly. We need to look at the left just to confirm if there was indeed a strong support or resistance that we can rely on. So if I draw my support line manually here, it makes sense that I can actually place a trade here, place a sell order, since this support level is going to be the new resistance. Now, the interesting thing here, let's pay attention to what happened at 61.8. Even though 61.8 is the strongest level of Fibonacci, please pay attention, look at the left. What do you see? We see that this level of Fibonacci, 61.8, is indeed strong, right? But let's see, where did the reversal happen exactly? It happened right on that previous resistance level. Meaning, the strongest thing you can trust is the drawing of drawing support and resistance manually. But if you want to confirm it, you can actually use Fibonacci. Now we know that this zone here of the resistance is Fibonacci 61.8, right? Now, however, if I wanted to place my trade here, why would I want to place any trade here? Looking at the left, I don't see any previous resistance. Look at that, it's empty, it's just a space here. The real resistance is lying exactly right here, because we see there is here a long wick at the top of the candles. So it doesn't really make sense to open any trade right on this level, because as I just told you, we never trade on Fibonacci blindly. We need to look at the left just to confirm where exactly is the support and resistance that I'm going to rely on, and then open the trade, and that is exactly what happened right here. So what I'm trying to explain to you here, that Fibonacci 61.8 is not actually a level, it's actually a zone. It's a zone of where the market is gonna reverse indeed. So you can never say that the Fibonacci retracement level is just a line that the market is gonna respect the whole time. It's actually a zone of support or resistance that we need to rely on in our trades. So let me just delete all these lines, and let me just now go to the more interesting part. Now the question is, Fibonacci retracement, are they permanent levels or temporary levels? For those who don't agree with the way we draw Fibonacci retracement, let me explain to you what I'm talking about. Let me just make sure that okay, that here seems good. I just need a neutral market just to show you that what I'm going to explain right now is correct. Alright, so that makes sense. Let me just show you here. Let me just delete all these extra lines so we can begin. Alright, okay. Okay, now I don't know where I am. Hold on. Okay, so let me do something right now. Let me draw Fibonacci retracement from this higher high to this lower high. Okay, also sorry, higher low. Now what do we see here? As I said, we can see that the market is still respecting Fibonacci 50 and reversed. No, I cannot say the that's here. It says we draw the Fibonacci from this high to this low, meaning we need to look right here so we can see that the market has reversed from 38.2 indeed, and then reversed again on 23.6 on that previous support level. Just what I have explained to you. That support level kept the position as a support. The market has reversed indeed on 61.8 and went all the way down to 38.2, and looking by the naked eyes, we can see that we had here a resistance level, which was the previous support, and therefore the market has reversed. Then the market went down to the previous resistance level right here. Now, that is not the point. The point is, are these levels permanent or not? Let's go more to the right level just to see what happened. Look at that. as I told you, the market here has broken out from 61.8, meaning that downtrend is no longer a downtrend, and now the market has actually broken out from 61.8, and right now it's no longer a downtrend, it's now an uptrend. And look what happened right here. Amazing. The market again, as I told you, has visited 61.8. Now that broken resistance level of 61.8, let me just get rid of all the mess here. That broken resistance level here, after breakout from 61.8, has become the new support. Interesting. Let's dig it more. Let's continue going more to the right. Check it out. 23.6 is still being respected. Amazing. Continue digging. 38.6 still being respected. 61.8 again still being respected. And not only that, even after the bullish breakout candle from 61.8, again that previous support level has kept its position as a support. Very interesting, right? Let's continue. Check it out. The very same level of the previous support level has also become a new resistance. Not only that, it also kept the exactly same level as a resistance later on with a second attempt. Isn't that amazing? Let me draw something here since we need to go more to the left. Now, as you can see, this blue line here is gonna guide me where is 61.8 still going on. Let's continue going. So the blue line here, guys, is Fibonacci 61.8 from that one trend line I have drawn. So I'm just going more in the future and see what happened later in the market. Okay, seems the market did not reach that level yet, so we need to cancel that. Go back to the daily candles and just delete that. So the point I'm trying to explain to you here is Fibonacci retracement levels are actually permanent levels, and if you see any level of Fibonacci 61.8, it's gonna be a Fibonacci 61.8 forever. I mean, that's the reason drawing the Fibonacci retracements is actually correct no matter how you draw it. These levels are actually strong always. I'm just trying to find a neutral markets where I can show you. Let me just see what I can do. We have a lot of lines here on the Euro USD. Let me get rid of all of them. And let's see what I can do if I draw my Fibonacci retracement from this resistance to that support level, and just do like that. So we can see, guys, that in June 2004, and remember I'm on the daily chart, that resistance level has respected Fibonacci 61.8 and reversed. This is 61.8, by the way. I think it's not clear in the video. Let me just go like that. Yes. Now you can see it clearly. This resistance is on Fibonacci 61.8. Now, let's check what happened later after 1 year. In September 2005, we can see that the very same level of the resistance on 61.8 is still being respected as 61.8. Not only that, the year after, again, June 2006, the very same level of that resistance level is still being respected on the 61.8, and still the level 61.8 is very strong and the market not able to break out of that level. Even later, 2 years later, guys, we can see that 61.8 is still very strong and the market couldn't actually break out of it. Remember that I just draw Fibonacci retracement randomly from that point here to this low here, from this high to this low, randomly. That's amazing. Let's continue. Look at that. The market is still respecting 61.8, and remember again, I am on the daily chart. Now what happened after the breakout from that 61.8? Again, 61.8, which was a previous support, right now is the resistance. And as you can see, the more you dig in it, the more you see that this level 61.8, look at that, 61.8 is still being respected. And remember that I just have drawn the Fibonacci retracement randomly from that high to this low. Now, why I'm saying all of that? What I'm trying to explain here is, no matter how you draw Fibonacci level, the level 61.8 is gonna be always very strong. And there is another reason, the Fibonacci 61.8 is always gonna be the retest after a breakout. No matter what you do, no matter how you draw Fibonacci from any high to any low, Fibonacci 61.8 is always going to be the retest of a broken support and resistance. Allow me to show you. For example, I'm just selecting randomly to draw Fibonacci from this high here to this low here. Please check it out. Always, as I'm telling you, Fibonacci 61.8 is always the retest of a broken support. Let me just draw it somewhere else. Any market randomly. As you can see, I'm just gonna select any market randomly, just like that. And remember, I'm on the 15-minute time frame, by the way. So let me draw Fibonacci from this high to this low. And as you can see, as I just told you, 61.8 is always the retest of a breaking out market. You can draw Fibonacci in the other way, by the way, if the trend is going in the this is downtrend. If it's going upward like that, if it's an uptrend like that, you can draw Fibonacci like this. And please pay attention, 61.8 is again the retest of the broken resistance. Isn't that cool? That you know more now about 61.8 level and how it works and why it's really one of the best levels to place your trade. It's because that the market is always going to retest the market is going to retest the broken support or resistance always on 61.8. And since we are aiming the first attempt, that means that the market most likely is gonna indeed reverse at 61.8. Now let's go to the strategy itself. Why or what strategy I'm aiming right now. Of course, after all of that explanation, that is the reason we want to actually start to trust Fibonacci 61.8 on the 15-minute time frame. Now, to understand the strategy, we need to know how we should draw Fibonacci retracement. Now, some traders, actually the beginners, and this is, by the way, one of the mistakes or one of the things I really needed time to understand in Forex, is how to draw Fibonacci retracement. Should I draw it from the absolute highest high in the chart to the lowest low in the chart like that? Is this the right way? This is how we draw Fibonacci retracement? Or maybe I can draw it just from this high here to this low here. So why this high here? Why could it be this high here? Why couldn't it be this high here? What makes the right thing to draw the Fibonacci is from this high here, not this high here or here. To save your time, Fibonacci is correct no matter how you draw it, as long as you draw it from a high to low. Fibonacci is correct no matter if you draw it from any high to any low or from any low to another high. That is just to summarize it and just to save your time from a lot of searching. Let me go deeper right now. Let's go to the 1 minute time frame. Okay, so let's just go to the 1 minute time frame, and I'm going to zoom in to the heart of these candles. Remember, guys, I am on the 1 minute time frame. Okay, so you can imagine that these are the tiniest candles of the 15-minute time frame. What you are seeing right here could be like just 2 or 3 candles of the 15-minute time frame. Okay, let me draw a Fibonacci retracement. Just make it as simple as that, from this high here to this low here. Can you imagine how tiny is that in the market? I will show you. Look at the 4-hour chart. Look at that. We are here. It's like the universe and we are in the earth. Okay, let me go back to the 1 minute time frame, and I really, okay, let's see. Okay, so look at that. I have drawn Fibonacci retracement on these very tiny small candles on the 1 minute time frame, but the market is still respecting these levels as small as they are. Please pay attention. I have drawn Fibonacci from this tiny high here to this tiny low here, and what happened later? The market is actually reversing at 38.2, still reversing again on level 50, and went down all the way nearly to 0. And then once the market has reached 61.8, again it reversed, and we can see that fake breakout, and the market went going down and reversed again on 32.6. Look at that. Check it out. Remember, I just draw Fibonacci on that very tiny small candle. Look at that. The market is still respecting these levels and reversing based on them. Look at that. 61.8 has been broken out. As we can see, the market has broken out from 61.8. And right now 61.8 has become the new resistance, and the market just kept going up again. Not only that, but we can see that, as I told you, after the breakout from 61.8, the market is going to retest the same level. Look at that, fantastic. I mean, that's amazing. Even on the 1 minute candles, you can see this is happening. 61.8 now being retested, and the market is again reversing here, so that a previous resistance has become now the new support. That means Fibonacci is correct no matter how you draw it. You just need to understand that you should go with the flow, go with the market, and go with the direction of the market. That is how you can use the strategy. So, for example, let's go to the pound USD. Now let's see how we can apply the strategy. Now, as you can see, as I told you, you need to go with the flow, right? So the trend right now is going up. As you can see, the pound USD on 15-minute time frame is heading up. So what you can do is drawing the Fibonacci retracement. As I told you, Fibonacci is correct as long as you are drawing it from low to a high, or from a high to a low. So I just wanted to show more examples just to make this clear, guys, because this is very important. Fibonacci retracement is correct if you draw it from this high to this low. We are still gonna witness a reversal on 61.8. Now, of course, again, I need to remind you that you can never do that blindly. You need to look at the left to confirm that indeed there is a resistance before you can trust the reversal to happen on 61.8. Now, let's continue. Let me draw Fibonacci now in the other way. I will draw Fibonacci from this low here to this high. What's happening? As I told you, the market has again reversed on 23.6 and still going up. So it's respecting that level. Now let's change the way to draw Fibonacci retracement. Let me draw Fibonacci from this high here to this low here. As you can see, the market has immediately broken out from the level of 61.8, as I told you, and look at that. That's 61.8. 61.8 has become now the new support. Now the breaking out of the level, since the market has broken out immediately from 61.8, that means this trend here is no longer going down, and the market is now going to continue rising more up. So that is example that drawing Fibonacci in any way is gonna actually work. Now let me show you example. Can I draw Fibonacci from this low here to this high here? Of course I can. Of course I can. Yes, why not? Look at that. We can see that the market has indeed reversed later on 61.8. Now the problem is that is the first attempt, and it already occurred, it already happened. Therefore I cannot place a trade right now, because we already, by logic, we already have 2 attempts on 61.8. That is what I'm trying to explain to you guys, that we always need to be logic in our trades, so we don't trade it blindly. We need to also follow the rules that we only trade the first or second attempt on any trade. Since we already have support number 1 and 2, therefore this trade is no longer good, and most likely the market is gonna continue falling down. Now, where I can expect to open another trade? Interesting. Now let's continue. This Fibonacci retracement, I have drawn the Fibonacci from this low here to this high here. Let's change that. I'm going to drag this Fibonacci retracement, and I'm going to expand it more to draw the level from that low here. So now the drawing of Fibonacci has been changed from this low here to this high here. Now that means that my next good opportunity to open any trade is going to be on 61.8 right here. And we can see that, as I told you, 61.8 always meaning the retest of any broken support and resistance. Therefore this is right here where I can actually place my trade, because that is the broken resistance, and the market most likely is gonna go down, retest the broken resistance, and then gonna continue going more up. Therefore my next good opportunity to enter any trade is going to be on 61.8. Let's try to find anything valid right now so I can enter in front of you. I just want to find any good setup, even as tiny as it is. Just let me go to the 5-minute time frame, and let's try to find any potential. Let me just show you that. That will be amazing, guys. Pay attention. Look what I'm going to do right now. I'm going to draw Fibonacci from this high here to this low here and open a trade. Please don't do that. I'm not telling you it's gonna work. I just wanted to show you the power of 61.8, that it works no matter how you draw Fibonacci 61.8. Now, most likely the market eventually gonna break out from the level. However, I'm just expecting to see a small reversal right here, and the market might actually go down to retest that broken support level. I just wanted to confirm to you that's the power of this strategy. There is a high chance that the market won't reverse, by the way. Look at that. The market has reversed. Check it out. Yes, indeed. Remember, I'm on the 5-minute time frame, guys. So what I'm trying to explain here is we are having here that previous support level, and most likely the market is going to actually retest that broken support level. That support level is gonna be remaining as a support. If this candle closed as a bullish candle, yes, it did. The market, look at that. A new 5-minute candle has just opened, and please pay attention. Yes, there is a red candle right now has appeared, and that support, as I told you, is going to be a support level, meaning 61.8 has again been respected. That's very interesting, right? That's amazing. That's really amazing. So what I'm trying to explain here is that Fibonacci is always correct no matter how you draw it. These levels are gonna be always respected. Since I am on the 5-minute time frame, let me go to the 1-minute time frame and look at that. We can see that the market has reversed indeed on 61.8 and went all the way down and reversed again on 23.6. Look at that. The market is still not able to break out from 61.8 yet. And what I'm expecting is from the market is to go down here. So that support level. Yes, look at that. It's happening right in front of you. Okay, let me just be clear that I'm not suggesting you to open a trade like that on this tiny time frame. I'm just explaining to you that it is working on all time frames. No matter how you draw Fibonacci, it's always gonna be valid. Let me just cancel the trade. So now that means, let me go back to the 15-minute time frame, and it means right now that you can draw Fibonacci retracement at any point from any high to any other low. So let me just now go through some examples to show you how we can prepare for the setups. Now, what we can see right now on the pound AUD on 15-minute time frame, the market has reversed from that support level. All right, like that. Let me just make it clear, like that. So what you can do to prepare for the next trade, you can draw Fibonacci from that high here to this low right here. And we can prepare to enter another trade on 61.8 or 50, by the way, as long as you are seeing a valid setup. Now, the valid setup right here, and pay attention, guys, as I told you, 61.8 is always going to be the retest of a broken support or resistance. As you can see, we're having right here the broken resistance level, and that is indeed the breakout candle. Therefore, we can wait for the market to reach that level, 61.8, and then place a sell order right here, and the market hopefully going to reverse. These examples I'm showing you right now is to show you how you can prepare for the setups, what you can do to prepare for the how to open the trades. I'm just trying to find something very quickly. Look at that. Let me try here my luck. I'm going to draw Fibonacci retracement from this low here to this high here. As you can see, it is still valid because we can see that we have here a support level, and the market has also here a support, and the market most likely going to respect 61.8. Therefore, that support is going to remain as a support. Now, actually, I just need some time, maybe just to open another trade, just to show you that this is actually a valid setup. However, it might take long time since we're in the 15-minute time frame, and I really don't want to spend so much time in this video. It's already 32 minutes. That might be a lot actually for some followers. So let me show you where we can start getting prepared for another setup. So let me just show you here example. we are having the AUD CAD, and I'm going to draw a Fibonacci retracement from this low here to this high here. Now, as you can see, we are having 61.8, but the problem, we already have so many attempts in the past on that level. That means entering a Fibonacci or entering a buy order right here might not be a good idea. So we need to actually avoid this level. Let me now change drawing Fibonacci from this high here, from this low here to this high here. Now that actually makes more sense. We are having right here a previous resistance level, which has become a support with one attempt. Therefore, placing another buy order here is not gonna be a bad idea. We can always trust opening another trade right here. Now the thing is, now you might tell me, but Salah, that is deceiving, because when you draw the level right here from this low here, that was level 50. But when you change it to from this level, now it has become 61.8. So is it 61.8 or 50? Now we are confused, Salah. Which one is correct? Actually, both of them correct. As I told you, my friends, Fibonacci retracement is more complicated than that, but as long as you are drawing it from any low to another high, for this low and high here, that is considered as a section or a trend. That means for this section here, for this part here, for this chapter here, this level is considered now as 61.8. If you draw Fibonacci from this low here to this high here, we can see that we had here also a reversal. So in this chapter or this section, from this low here to this high here, 61.8 is considered right here. As you can see, the market has indeed reversed from that low here to that high here. So that's the power of Fibonacci. That's how we can rely on it. As I told you, you can play it yourself. You can just try drawing it and test it by yourself. So that is the strategy. That is what I'm doing always on Fibonacci strategy, to find these strong setups. And of course, as you might already know, when you open a trade, for example, let's say you have opened a trade on the level 23.6, right? Usually you can set your take profit level to be on the next retracement. However, that is totally up to you where to decide your take profit level. I have explained to you how to understand Fibonacci and how it's moving. So for example, if I have drawn a Fibonacci retracement like that, and I decided that I want to enter with the buy order like that, so I wanted to place a buy order right here. Now, the rules are exactly same of hit 20 pips a day and hit and run. If I place my trade right here on that previous resistance, I can exit my trade at the nearest resistance also, which is the next Fibonacci retracement. And you can set the stop loss to be exactly the same. If you want to use a stop loss, which is up to you, you can just set the exactly same amount of pips for the take profit as your stop loss. Trust me, guys, you can use this strategy and you will be surprised by the winning ratio you are going to have. And I'm really interested to hear from you your review and experience with this strategy. Please prepare for it. Please watch this video, because we are going to rely on it on the upcoming days using the live trading with Fibonacci retracement. So until then, I really hope this video was very informative to you, and I really hope that you have learned more about how to use Fibonacci retracement and why 61.8 is the most trusted level in Fibonacci levels. In the end, I hope that was informative to you, and I would like to thank you for watching.